and that's monetization of the debt. And that's when gold's going to go bonkers. And the gold acts as the barometer for monetary devaluation. And, we're there. That's what gold's sniffing out right now. And then the final point that I saw earlier today, JP Morgan said, listen, if like 60 basis points, less than 1% of all foreign held US assets shift into gold, this is less than 1% of all foreign dollars offshore shifts into gold. Gold's going to be at $6,000 an ounce.
Garrett Goggin, good morning to you. How are you?
Hey, Andy, again, how are you?
Doing really good. Really good to see you. We've had quite the run here, really, since the new year. It started before then. You could argue maybe in December, or even later November, but really quite the run in gold. Want your overall opinions on that? And we've been going sideways here for several weeks. Is this done? Is it just beginning? Is it hitting your targets? Tell me what your thoughts are.
Yeah, I've done a few interviews a few weeks ago, and I was talking to technical guys, and gold was very well extended past its 200-day moving average, and yeah, no doubt, it was expensive, and it's trading back, in its range right now. But I'm a CMT, so I'm a technician, and I do a lot of quantitative stuff. But the heart of my research is fundamental analysis, right? I'm a CFA, chartered financial analyst. I build NAV models. I figure out the real value of these assets, and I measure what they're trading at. I try to find values, and it takes a long time to build positions. And I'm not looking to day trade the gold price or any of these stocks. I'm looking for long term, holds that they take time to generate value and move up the food chain. And I'm looking for companies that can outperform consistently. And it leads me to, strongly profitable companies that generate a lot of free cash flow. Good things happen to shareholders of companies with strong free cash. They are able to drive earnings on a per share basis. They buy back stock, they issue dividends, all sorts of stuff. And just past couple of weeks have been crazy. Like out of my portfolio, like 4 or 5 of companies have been taken out already this year. Mag Silver, prime example. Mag has been one of my favorites for years. Why? Because it's extremely high grade. Grade is the highest correlation to profitability. Why? Because when you mine, your costs are relatively fixed on a per tonnage basis. Underground in Mexico, it's like $280 per ton. So the only thing that moves the profit needle is increasing your revenue. There's a cost of fixed, and grade is one of the only things that does that as well. And you can tweak the recoveries, make them a little better, but it's great. Mags want a Scipio, about 600 grams a ton. They own 34% with partner First Neo. They just started paying a dividend last month. And then I spoke to the guy in charge. I'm like, is this dividend going to continue? And he's like, well, it's based on 30% of free cash flow. And then I looked, I measure, the free cash, the production for every single quarter. I'm like, holy shit, like they've been able to pay this dividend for every single quarter they've been in production, like this big. And the dividend was about 5% to 6% dividend yield. I'm like, this is ridiculous. Like a high grade operator in Mexico, a silver stock that pays 5% dividend yield. And then it just got taken out yesterday by Pan American. It just, my metrics, I look for undervalued stocks, and, the larger miners look for undervalued opportunities as well. We look at the same sort of metrics. A lot of the people that are in the industry that you hear, talking about silver companies and gold companies, they're looking for leverage plays. They're looking for companies that can go from 1 to 100. But the thing is, like, they lose money 98% of the time. But when silver rips, yeah, it's a short squeeze. It's going to go up for a week or two, but then it goes right back down. They're going to start losing money again. I look for the ones that make money consistently on a day in, day out basis. So I'm buying free cash and discount.
Got it. So on that, really, go ahead.
The gold, I'm going to wait for myself a little bit, but the gold price, I'm not worried about the day-to-day fluctuations. And then, I've noticed over the past couple days, we woke up, we got a China deal. Gold sells off. People are freaked out. They're like, "Oh, that's it." Yeah, this China deal's great. I ordered my 7-year-old daughter these glitter unicorn Crocs on Amazon like a month ago, right? They've been on back order because we can't get any goods from China. And all of a sudden, I get an email today. It's like, "Oh, they're going to be shipped. They'll be here on Wednesday." All right, great. So we're getting our glitter unicorn Crocs. Yet nothing. They haven't addressed the systematic imbalances behind, all this trade. The U.S. Is $37 trillion in debt. China runs a trade surplus of, $100 billion basically every single month. And in the past, they used to take these, recycle the dollars back into U.S. treasuries. They're not doing it anymore. They're buying gold hand over fist. They own them like 2,500 tons of gold by some officially. Unofficially, they hold up to 5,000 tons of gold. They're buying gold. And why are they buying gold? Because the U.S. weaponized the dollar. They weaponized the dollar against Russia. When Russia invaded Ukraine, they seized Russian assets. They basically pressed a button and deleted all of Russia's treasury holdings, billions and millions of dollars of value. It's not safe to hold your foreign reserves back in the U.S. dollar, because if you run afoul of U.S. foreign policy, they're just going to go, delete it. That's why these countries own gold now. They're buying gold because you hold it in your central bank, in your vault, got around the military. No one deletes it. Nobody can touch it unless they take over your country. And they're choosing gold, and that's not going to change anytime soon. And then, with these trade negotiations, the foreigners own all the cards, because if we don't have the foreigners buying our treasury debt, like, the U.S. is toast. It's the dollar's screwed, and the only solution after all these buyers walk away is for the Fed to step in, and that's monetization of the debt, and that's when gold's going to go bonkers. And the gold acts as the barometer for monetary devaluation, and we're there. That's what gold's sniffing out right now. And then the final point that I saw earlier today, JP Morgan said, listen, if like 60 basis points, less than 1% of all foreign held U.S. assets shift into gold, this is less than 1% of all foreign dollars offshore shifts into gold. Gold's going to be at $6,000 an ounce. Ooh, that's what I'm looking for. And then, I watch the gold stocks all day. They all trade together. Like, there's no, they all go up together. They all go down together. There's not much volatility in them. Yeah, MAG went up, but got bought out. But the other 99.9% of them, they all do the same thing day in, day out, because there's no money in the sector yet. There's no hot money chasing hot stories around. You know what I mean? And, when this market peaks out and there's investors in the market, a lot of new capital, they're going to be chasing these stores. We're going to see wacky moves. We're nowhere near that yet.
Yeah. So in your opinion, then that is really coming. That's what's coming in the next several years or a couple of years. Do you give me?
Yeah, it always takes longer than what you think. I've got my favorite companies. I'm like, oh, this one's going to get bought out. And, it takes years. Origin has been a favorite of mine, right? And that just acquired by Triple Flag. Origin owned a 1% NSR in Silicon Merlin, owned by Anglo Gold. It's an amazing asset, especially with Trump. It's going to be the largest gold mine in the world. It's going to get fast tracked. It's just amazing. And Triple Flag recognized that and came in and swooped up Origin. But I've been on Origin for like 2 years since I saw the stuff in Anglo's MD&A buried in there a couple of years ago. And everything takes longer, so you got to be patient. That's why you don't want to trade it. And to be honest with you, the best way to play the gold market, the best in gold investment are the other gold royalties. And I created a portfolio called the Golden Portfolio. That's my flagship. It's all royalties. Why? Because their costs are fixed. You buy these things, you put them away. If you want excitement, go to the casino. If you want to make money in the market, you invest for the long term.
Yeah.
The number one, if you have to invest in anything, in a gold bar, gold coin, gold stock, gold ETF, gold anything, buy Franco-Nevada. Franco-Nevada is like the best way to invest in gold ever. It's a royalty. They had hundreds of assets. All they needed one or two to go right. They've got Cobre Panama. Trump's getting in Panama. Cobre Panama is likely going to come back online. That's 33% of Franco's cash flow and profits. It performs year in, year out. That's the stuff that I look for.
Yeah. With the smaller guys, do you look at any explorers, or do you just want producers that are people that are close to cash flow?
Yeah, no, I've got a lot of developers in there. I get developers. The crazy thing, I call it the gold anomaly, is the gold price has gone up a lot, right? It's at $3,200, and people are acting like it's the end of the world because it fell $100. It's but it's driven a lot of value into the underlying projects of gold developers. Some of my portfolio, the stocks have done great, but one, for example, trades at like a 700 mil market cap. Their project's worth $2 billion, and the stock curve tells us that EV should rise post to NAV on first production, which is next year, and it's not even close. So they've done well, but the value of their assets, gold has driven the value of their assets much higher than what the stock price has moved. So, people look at these things, they're like, oh, it's done really well. It looks overvalued. It's like, no, it's more undervalued than it ever has been.
Yeah. Relative to the price of gold.
Yeah. And I do follow explorers. I follow high grade drill results because, once a company discovers a high grade deposit with strong drill results, it takes years to prove it out, right? You first define an inferred, and then measure it, indicate, and then prove it or probable. It takes like 3, 4, 5 years. But once you get a wide width high grade drill hole, there's a strong probability that you're going to find more high grade wide width drill holes around it, and you have to define your ore body, and that takes a while. But still, some of them flame out, so they're a little more risky. You need to spread your bets, but those are the ones that will go 1 to 100, 101. Yeah.
Yeah. Talk to me a little bit about jurisdictions, because you can get a great valued asset. And I was looking at one just really 2 weeks ago, but iffy about the jurisdiction just because of the political stability. It is in South Africa.
Yeah. Okay. See, the issue is no risk, no reward, right? Like, another one of my companies that just got bought out was Caliber. Caliber, was undervalued. It was generating strong free cash flows in Nicaragua. So it was overlooked. They just got bought out. So the company is going to be a Canadian producer of about 1 million ounces of production, which is safe jurisdiction. So you should get the re-rate higher. But another one of my companies that I'm looking at is in the Congo, and it trades for less than 100 mil, and it's got a project worth like $1.5 billion. And the reason it's so cheap is because it's in Congo. But the thing is, Mark Bristow, right, of Barrick, has been operating Kibali in the DRC without any issues for 15 years. Kibali is one of the best gold mines in the world. And then the gold miners, they're looking for assets to put in production. So are you going to pay $1 billion for a project in Canada, or are you going to pay 100 mil for a project in the DRC, right? That you're leaving $900 million on the table. And then with everything that's going on with Trump, it's like the golden age of America. Everything's about gold every day. It's like Christmas for gold investors. Trump's getting involved with the DRC, minerals for security. Like, if there's money to be had, security's coming. And Eric Prince, the founder of Blackwater, negotiated a deal that's going to be announced with the DRC. It's going to be security for minerals, and the DRC could be one of the best places to operate, at a low cost and at a discount. So, the jurisdictions don't necessarily scare me because, I follow the money, and if the money's there, it's more than likely going to get done.
Yeah. And also just looking at value, I'm not too worried about jurisdictions. I just want to make sure that I'm getting compensated for my risk if it is in a risky jurisdiction, if you would.
Yeah. You get compensated for your risk by the price that you pay, right? If you're at a dime for an asset that worth $1, that's good risk.
Yeah. Absolutely. So if you could name drop a little bit for me and all of our viewers and listeners, some of the companies that you've followed that have maybe been taken out, maybe a company or two that you're looking at, and then share with us about your products and services, which I'm a big fan of.
Yeah, so I started 2 years ago. I went independent 2 years ago. I was working for Stansberry Research, and I started the Golden Portfolio right when I left. And it's got three products. The Golden Portfolio, it's all royalties, like 17,000% since 2007 if you just bought royalties, versus the GDX, which is unchanged, the larger miners, Newmont, Barrick, all that. So the royalties are the best way to play it. I've got my GT10X, which are smaller explorers, developers, and miners that are fundamentally undervalued. You buy in dollars for dimes. Like I was saying, I measure ore bodies. I lay a mine plan over it to estimate a NAV value, and then I compare that to market caps. And when I see significantly undervalued opportunities with good risk, I'm all over them. And the portfolio is 30 companies, and then I've got a front end product. It's 189. It's the GPIV. GPIV are basically my 4 or 5 top picks. Portfolio has not changed very much. And my GPIV, it's up 62% year to date. Since the beginning of last year, it's up 280%. It's basically up 300% in 2 years. But the GDX is only up 50% over that time. These things are still significantly undervalued. It's not like they've reached, full valuation. The gold price has gone up tremendously. And like I was saying before, it's the golden anomaly. These things have a long way to go.
Got it. What companies, you mentioned Caliber, and then you mentioned
Caliber, Origin, yeah. And, regarding Caliber, one of the things that tipped me off, it's like a free cash flow yield. You just look at, the free cash from the mines, you compare that to the market cap, and you can get some sort of yield on it. 20% seems to be like 15 to 20% seems to be the magic number for me. And the original Caliber, that was founded by Blaine Johnson and Doug Forrester, who the original Caliber was called Newmarket. Newmarket got bought out, and Blaine and Doug went on and found a Caliber. But the thing that tipped me off to Newmarket back in the day was that 20% free cash flow yield. It was gushing cash, and the stock price was extremely low. So I got involved. Good things happened to shareholders of companies that generate strong free cash. Newmarket got bought out by Kirkland. The Fosterville started kicking in with the high grades and free cash. The Kirkland went nuts. And then Nico came in and bought Kirkland. And if you hung on the whole way, you'd be up 10,000% plus. But it's the strong free cash flow in the original Silvercrest mine. Silvercrest Metals just got taken on by Core, but the original Silvercrest mines, 20% free cash flow yield from Las Chispas, and that got taken on by First Majestic. And then this current Silvercrest Metals, once again, actually that one reached peak valuation when it got added to the GDX a couple of years ago. But again, high grade deposit generating tremendous amounts of free cash, and Core snapped it up. So it starts with the drill results, the high grades, and then it moves into production, and the high grades generate strong and profitable production. And then sometimes the market doesn't recognize it, like Mag Silver. Like when I figured that out a few weeks ago, that had a 5% or 6% dividend yield, I'm like shouting from the rooftops. I'm like, this is Mag Silver. This is the best deposit in the business. It's paying a 6% yield. Like, it's undervalued. Like most gold stocks, royalties, they pay a lot of dividends, but it's only 1%, So nobody cared. And that just shows the sentiment in the sector. Like when you get an opportunity like that, and if it's, bubblicious territory, market's going to go crazy. Market didn't care. I didn't see one person talking about it. There's not enough interest. People don't understand. People didn't connect the dots. And this was just a month ago, and then it gets bought up, right away. So there's opportunity, tremendous opportunity in the market right now.
Yeah. Do you see a lot more consolidation here as the year progresses? A lot more buyouts coming?
I don't know if the managers are smart. They should, right? Because you're spending 300 mil for $1 billion of free cash flow versus at market tops, they're buying company for $1 billion. They're spending another $1 billion to build it, and they never get that $2 billion back. A lot of the majors, the thing that drives me nuts in the mining sector and the gold sector is companies that say, hey, we grew our market cap 5 times. We grew our production from 200,000 ounces to 1,000,000 ounces. And then they're talking about that. And you look at their share price, like, wait a minute, your share price went down by 50%. It doesn't add up. Why? Because they didn't increase earnings on a per share basis. Yeah, it's to buy production, but you need to do it accretively. You need to drive earnings on a per share basis so your share price is going down. So, right now, you're able to buy a company for 300 mil, spend 500 mil to build it. That's 800 mil. You're going to get $2 billion back in free cash flow. That's going to drive earnings per share. That's going to drive your share price higher. But the majors all do stuff at the same time. They all wait for someone else to get in. And usually it occurs. They end up waiting till the top and then getting a piss and match about some asset that they paid $7 billion worth, like Red Back and Ty Burton, Kinross back in 2011, the last fig. And we're
Yeah. Got it. Any thoughts you want to share with our viewers here from like what to look for over the summer and maybe through the end of the year?
on. I don't know. We've been swamped. We've been so busy.
We're so busy.
Reports and getting people into the my GPIV, and it's done great. Everyone is extremely happy. I'm looking forward to going to Cape Cod and Boston with my kids and hanging out for a few months and writing a couple of reports from the cottage.
Yeah, no, I'm so with you. We're gonna be in your neck of the woods in the next couple of months, just hanging out. It's been so busy. Garrett, I'm a big fan of your work. Big fan of your work. How do people get in touch with you? How do they learn more about your products and buy your products?
Yeah, goldenportfolio.com. I got a free Secrets of a Mining Analyst Masterclass. You can get 2 free picks there. And then follow me on Twitter, Garrett Goggin. I'm posting there pretty often. And then we'll throw up a link here so you can get access to my GPIV, the portfolio for
Excellent.
189, and it's up by I don't know, 68% already this year. 62% already this year. And yeah, the opportunities, there's people still don't know about these things. And, they've gone up a lot, but, one of them trades for 80 mil market cap. It's worth 1.5 bill. So yeah, that's got a long way to go.
Do the math. All right, Garrett, I want to thank you so much for your time, and hopefully you get some fish if you fish up in Cape Cod.
Thank you. Stripers.
Take care.
Yeah. Thanks, Eddie. Bye.